All right, it is Monday of a new week, and we had this nasty open where we dipped under 4,200 quite a bit, went down to 41.89. Then the 10-year Treasury, the yield dipped under 5%, and so that's what this little rally came from. Now, this is a very, very small rally considering where we've been and the heights we were at just 4 short days ago. 4 short business days ago, we were nearing 4,400, and now it dipped all the way down to the 41.89. 200 points, horrible. So what does this mean? Well, it means I've been asked a lot of questions about gold. I guess crypto and NFTs have gone out of popularity since the crash, and a lot of people got burned recently. Has a bad taste in their mouth, so they're back on the gold train. Now, there's a few ways you can invest in gold. Few ways you can actually own gold. You can go out, you can find a broker, you can buy gold coins, or you can buy a big brick of gold and keep it that way. Okay, and then you go back to that same broker to sell it. Now, there's ETFs out there that do the same thing. So this ETF right here, GLD, owns 27 million ounces of gold, and it's worth $54 billion. That at the spot price of 1975. You could actually buy this ETF for 181, and it will follow the price of gold. You will lose, this value will go down based off of the gold being less valuable, and this will go up based off if the gold was more valuable. Now, why would you do this? Well, it says right here, they rolled out this fund because the number of barriers preventing investors from using gold as asset allocation and trading tool. Large number of barriers. These barriers include logistics of buying, storing, and insuring gold. In addition, certain people can't invest in gold or hard commodities like pensions and mutual funds. They can't hold physical commodities. So they made it easier to gain when gold goes up and to without holding the actual bars. Now, another way you can invest in gold is by going by miners. This is a miner ETF. As the price of gold goes up, then miners mine more because they have more incentive to mine it, right? They have the equipment, they have the technology, they have the know-how to go out and actually get the gold out of the ground. When it becomes more valuable, the companies become more valuable. What they're producing becomes more valuable. So that's another way to kind of have a proxy into the price of gold. Why would people invest in gold? Typically, as the dollar gets weaker, gold gets stronger, and vice versa. As the dollar gets stronger, gold gets weaker. So it's kind of has an inverse relationship with the dollar. People are always saying, why did we go off the gold standard? Well, whatever. We have a fractional reserve banking system now, which allows people to borrow at a much higher level. And we technically wouldn't have as many homeowners if we didn't go to our current system. If we stayed on the gold standard, much more difficult to borrow money and actually for most of us to get a house. That's why we did it. Now, couple scenarios. If the market were to crash, like say 2008-ish, then these would go up in value, no doubt, go up in value. And then what you have at home would go up in value. If you have gold coins or gold bars, absolutely go up in value. But there's still a moniker of a system. So you could still go to the bank. Some banks went under. You could still go to the police department. You could still do things like that. There's a societal structure, and gold would benefit you in a crash like a 2008 or a 2020 20 crash. Absolutely. Now, where it won't help you is in apocalyptic crash. Here's when it won't help you. So let's say you know, all hell breaks loose, zombie apocalypse, no hospitals, no police, no anything like that, no banking system, nothing. We're out here in the middle of nowhere, just trying to survive. Gold is not going to help you. Why? Because it's too much of a liability. You're not going to go around to your neighbors scraping off pieces of gold to buy cows and horses and whatever else you need to survive. You're not going to trade it that way. What you're going to trade is you're going to trade a more localized type of commodity. So whether that's bullets, whether that's cigarettes, whether that's more commoditized in a smaller neighborhood, like, hey, I'll trade you zucchini for a duck or whatever. That's where it's going to go. On a more larger scale, you're going to have bigger commodities like bullets, like stuff like that, where it's going to be easily traded and it's going to have an actual practical use. Gold has no practical use in that scenario. Now, as that scenario gets better and better, I don't know how long this zombie apocalypse is. As it gets better and better, gold may re-enter as a type of money before we get back to the fiat. Fiat money is paper money. It may have a transitional period there, but there has to be some structure in place for gold to be valuable. Remember when the gold rush, where California, San Francisco, all of that, the San Francisco 49ers, those guys, they're named after actual 49ers. They were mining for gold, and there was a structure there. There was a little town you went to. Gold was seen as popular, and there was somebody there to weigh it and turn it into what you wanted it to weigh. You need structure like that in order for gold to be valuable. So we're in this kind of weird period. It's not going to help in a zombie apocalypse. There has to be some kind of structure to value the gold and to exchange the gold. And we can't be at survival levels. We can't be, hey, I just need to eat, forget your gold. Can't be all the way down there. We got to have some kind of, paper or some kind of other commodity doing the heavy lifting in terms of actual exchange. That's the reason I tell people, they asked me, is gold a good thing to invest in? I said, depends. What do you think is going to happen? You think China's going to win out and the dollar's going to get crushed? Gold's maybe a good idea. You think we're going to a zombie apocalypse and you need to stash bullets? No. Go get the bullets. Get the gasoline. Get that stuff that you need. Don't get gold. So, I mean, that's kind of gold in a nutshell. There's a few scenarios. You have to pick a scenario in order for gold to be valuable, just like any other investment. You could say, what's the best investment? And I'll say, depends. What are you trying to accomplish? Same thing with gold. What is the disaster? And then I will tell you whether it's a good idea or not.